Oil holding near $79 US a barrel. Israel yesterday rejected a ceasefire proposal for the Gaza Strip and now has taken control of that Rafah border crossing. Meanwhile, the Russian deputy prime minister says the OPEC Plus group is considering the possibility of increasing oil output. Our guest says with prices moving lower lately, there will be an opportunity to buy the dip, but not until crude goes a few dollars lower. We're joined by Rebecca Babin, senior energy trader at CIBC Private Wealth. Thanks very much for coming on the show, Rebecca.
Thanks for having me.
You think oil still looking a little high? You wouldn't be going in at this stage?
Yeah, I think there's a couple of factors that make me feel this way. The first being, I think we've had a lot of good news priced in already. We're going into an OPEC Plus meeting, and as you mentioned, Alexander Novak, the deputy prime minister of Russia, made comments this morning that they're really analyzing this situation closely. The market has already gone ahead and assumed that they're going to roll these cuts over, at least on a monthly basis when they meet in June. So anything short of rolling those cuts over is going to be a disappointment. Secondly, the market is anticipating inventory draws coming very quickly. And what we've seen in April is inventory builds. And we've seen softer demand, particularly from US gasoline consumption, a little bit from China, and a reversal in Europe. So I don't know if the market can deliver as quickly as expectations are for these inventory draws. And lastly, we've had a huge tailwind from macroeconomic, the reinflation trade really being pumped through all commodities, including crude oil, and we're starting to see the consumer numbers start to kind of top out, and I don't know if that tailwind's going to be there. And lastly, we're right on a very important technical level, and if any of those factors break down, I think we could push below those technical levels, triggering a lot of kind of systematic selling, which makes me think, let's wait and see here. I think we might get that push lower, and that's your opportunity to actually step in and buy the dip.
Yeah, because I think oil just bounced off its 100-day moving average, or one of the moving averages.
That's right. Its 100-day was just about 50 cents lower than where it is now. Its 200 days is right below that. So really, really critical technical levels that influence the way systematic funds trade. And if those break, we still have a lot of length and positioning that could start to really unwind regardless of what the fundamental picture is necessarily saying. And we've seen this happen before, and it can really cause these really deep overshoots in crude oil. And I worry that if you jump in now and get right back on that bull trade, you might be setting yourself up to get hurt in the rodeo. And you might want to just wait a second here until we get confirmation that some of these positive catalysts that the market is expecting actually come to fruition.
It's interesting. We saw a calculation last week that this was from our Bloomberg colleagues, that U.S. gasoline consumption has dropped to the lowest in about a decade. So despite all these SUVs, apparently vehicles are relentlessly getting more efficient.
That's exactly it. It's a combination of factors, but the most important factor is fuel efficiency. And it's really, really taken a dent out of gasoline consumption in the U.S. Obviously, EVs and hybrids have played a role, but to a much lesser extent than that fuel efficiency. And I think when we're looking at the numbers specifically for tomorrow, we really need to see the DOE data is coming out tomorrow. We need to see demand improve. And if we don't, I think we're going to see that break at the technical level. It's something that traders are really focused on. I think the most important number that's going to get released in the data set coming out tomorrow morning.
And would OPEC Plus dearly love to increase production? I mean, the Russians would welcome the extra revenue, I suppose.
So that's a great question. I think that some members within OPEC really want to increase production. Russia potentially. The question there is, do they have the ability, given what's happening with their refiners and some of their production constraints? The other countries like the UAE, Iraq, Kuwait, to a lesser extent, they do want to increase. They've invested in their infrastructure. They've done everything they're supposed to do that OPEC told them to do. Invest, you'll be able to increase your output. And they've been really held back, not just over the last 6 months, We're talking about years here. So I think there will be pressure internally for OPEC to bring back production. I think there'll be pressure externally, obviously from the United States, which has not had a lot of success there in terms of influencing them. But I think as the tension builds and as the group realizes every time they don't bring back production, another non-OPEC producer steps in and takes market share, they may be willing to surprise the market a little bit here. And if they don't bring back the production in June, posture that they will do it in coming months when summer driving season kicks in. And again, the market is not going to like that at first. And I think you'll get a pullback.